I'm going to walk you through my plans on trading Tesla earnings, which is on April the 22nd. So that is next Tuesday. I'm shooting this video on Saturday, the 19th of April. So the market is closed at the moment, and I'll be placing this trade just before the close of the bell on April the 22nd to get the most volatility out of this trade. But what I want to walk you through is the strikes that I'm looking at, the strategy that I'm looking at, and how it's got a downside protection of over 10% so that we can still make money if Tesla does make a move down. And all I ask for in return is that you smash that like button and don't forget to subscribe. So we've got Tasty Trade up here, and again, I use Tasty Trade just for visual purposes for my videos because it's a lot better than Interactive Brokers, but I trade on Interactive Brokers, so just putting that caveat out there. So we're going to go into the 6 DTE April the 25th. Now, there may be 6 days left, but by the time I place this trade on Tuesday, there'll be a lot less time, and I'm looking to get out of this position on Wednesday. So I'm really looking to hold this for less than a day, really. So let's have a look, see what we got here. Currently, the IV rank is 52.8, and if we just look at the chart, at the top you've got the underlying price, and at the bottom we've got the IVR high and low over the last year. And you can see whenever we get spikes, we always see that downshift in volatility. So this all here is all related to tariff-related stuff. So I expect volatility to continue to go up into the 80s, 90s on the Tuesday. So Tuesday, I think the market is open on Monday, but I wouldn't be placing this trade on Monday. I'll be placing this trade just seconds before the market closed. The strikes might change slightly depending on what happens to the underlying price on Monday and Tuesday throughout the day, but you'll get a feel in terms of what I'm looking to do in this position. So I'm not going to place this trade on Monday. I'll be placing this trade seconds before the market close. And again, it's really important that if you're trading earnings, you want to get the heightened volatility in there, which is literally just before the earnings announcement. So if it's after the close, you really want to do it 5 to 10 minutes before the market closes on that day prior to the earnings release. So if we go to trade and we go to April the 25th, again, I'll be utilizing my 1-1-1 trading strategy, which is a 3-legged strategy. It is a debit spread, so you're buying a put and selling a put. You do that for a credit, and then you open a further out the money put, which finances the debit spread, and a little bit more to open the trade for a credit, so you have no risk to the upside. So again, we have a look here at the 240, 138. So here we go, is at the money strike around the 240, 242, and you can see here that I'll go into the strikes, but we've got this massive green bar here, so we have no risk to the upside whatsoever. So again, I wanted to make sure that my strikes is outside of the 1 standard deviation move. So again, I've decided to buy the put leg of the debit spread at the 1 standard deviation, give myself a 202.50 put leg, and that is a 750? Yeah, 750 with strike, and then I'm going to purchase the 200 put to then offset the cost of that debit. So if I was to delete that leg, the cost of that spread is 86 cents or $86, and if I can buy the 200 for $1, or I can go a bit further out and get 82 cents or $82. So if we stick with the 200, you can see here that my break even is somewhere around 190, 192.50, 191, and we'll have a look on option strat for the exact break even. But if we calculate this from the current price, it's roughly about 21%. So between next Tuesday and Friday, so Wednesday, Thursday, Friday, in 3 days, Tesla needs to drop 21%. That can happen, and you'll see when we look at the P&L on option strat to actually show that the price can still move down 5 to 10%, and we can still make money. So that's the advantage of using shorter dated options, is that even if you get the move in your favor or slightly out of your favor, i.e. the stock goes down, you can pick up money pretty quickly, and this is what we're banking on. And again, this doesn't take into account the heightened volatility that we're going to get on the rise up, and what it's not going to take into account is the volatility crush after earnings as well. So not only does Tesla need to move by 10, 12, 15% in 3 days, it will also benefit from that IV crush as well. So again, I can put my strikes a bit further out as well, just to get a bit more premium from this trade. But again, I'm not going to be placing this trade on Tuesday. This video is all about just understanding how I would play Tesla to quickly go make a quick $100, or anywhere between $100 and $850. It's probably going to be around the 120, 130 mark. So $100, again, looking to get out around the $100 mark from here. So again, this is how the 111 is done. You have your debit spread. We got a $7.5 with wide spread, which is financed by an additional out the money put. So if we bring up option strat, so you guys can have a look to see how this is all put together from a graph perspective, you can see here, this is what we call the tail. So this is the current price of Tesla. If the price goes up, no issue on the upside. I'll probably let this run out and expire worthless and pick up the full credit of $100, $101. And we still have a little bit of a gap over here. And then this is where the debit spread comes in, and there's your $7.5 wide spread. And then we're giving back all of that debit spread goodness or premium or whatever you want to call it to widen our break even at 191.49, which you can see here is a 21%. So between Tuesday and Friday, it needs to drop 21% for me to start even being worried about this trade, and that's not even taking into account rolling the position into the next cycle. So again, there's ways we can manage this trade if this does happen, but this is how I would like to look at this trade from that perspective. So again, if we look at it, we're opening it, we're open for a credit, $101. Max loss, yeah, if Tesla goes to zero, but we're happy with that. The maximum profit is the width of the spread plus the credit. So the width of the spread is $7.5 plus the $101. That gets you your $851. Probability of profit is 96%. Really high probability trade here. And again, our break even is at 191.49, 21% below the current price. I actually think we'll get higher credit and a higher break even because of that expansive volatility that will happen over the next couple of days as to the lead up for the earnings. Now, if we go to the table piece, this is the bit I want you to guys to kind of have a look at this. So I'll be placing the trade on the 22nd, so it'll be after the market close. So all of this stuff here doesn't really make much difference. It's April the 23rd is the bit I want to show you. So look, even if Tesla goes down 12% based on the current prices, 12% wherever Tesla's trading at the end of Tuesday's close, I will still look at $120 to $130, and that's assuming the current implied volatility, no IV crush on part of that as well. So if anything, that is assumed volatility will stay the same, but we know it will go in our favor. We know it will go down. So that's going to be an even better situation than where we're currently at. And again, even if I attempt to leave it for another day and it goes down even further to 15%, I can potentially walk away with it just a little bit more. If price goes up, I'll make my 100. So even if it goes down by 6%, I'm still making more than my current price there. So when the market opens on the 23rd, depending on what's happening, I'll look to get out of this trade relatively quickly. I don't want to be hanging around with this earnings trade. But you can see here how the 111 helps us here to create a scenario that if it goes against us, we can still make more money than the initial credit that we received. So I hope this, guys, makes sense to you. If you've got any question, comment down below. But that's how I'm looking to play Tesla. A quick in and out $100 to $150 trade. And it may look like I'm putting a lot of risk up there. But again, I am on a margin account. So it's going to be about 5,000-6,000 to place this trade. Tesla is a volatile stock. So again, I have given myself a bit more of a buffer around the 21% mark, as opposed to generally 10 to 15%. I can probably pick up some more premium off the back of this trade. But if you guys got any questions, comment down below, and I should see you guys in the next video.